big development happening at the top level at Eternal, and that is Deepinder Goyal putting down his papers. Deepinder Goyal has resigned from Eternal as the CEO. In his letter to the shareholders, he says that, dear shareholders, today I'm going to step away from the group CEO role and, subject to shareholders' approval, will remain on the board as directors, as board of directors as vice chairman. So not a complete exit coming in, but yes, the top deck at Eternal has been shuffled. Albinder Dhindsa, who is the head of Blinkit as of now, is going to be taking over as Eternal's new group CEO. That's the statement coming in from Eternal, and that is the big breaking this hour. Let's take it across to Dharmesh Kant, head of equity research at Cholamandalam Securities, to understand first up this development, and then we'll talk about the numbers as well. Dharmesh, I don't think anybody saw this development coming. How are you looking at this? How do you expect the stock to react tomorrow morning?
Yeah, I mean, this development was totally unexpected. And maybe Mr. Goyal is trying to give an impression of more of a professionally run kind of a company. And from the sidelines, he would still be guiding the operational growth and maybe focus more on the, organic structure of the growth for this company. So, I mean, the company, stock price is likely to take it with a negative, change tomorrow morning with this development, because had it been planned and laid out, then it would have been far better. But just with the earnings announcement, such kind of a news flow, when you are still, struggling to get back to a good, solid kind of a profitability track, it's a midway kind of a journey. So, unexpected, to my sense, this particular news flow will have a negative reaction of the stock price tomorrow morning.
So unexpected announcement, yes, Dharmesh, that's our view over here as well. Nobody had expected to see this happen right now. But Dharmesh, let's talk about the numbers. It's a mixed set of numbers, but largely good, looking good for Eternal. Talk to us about how you're reading the numbers. The revenue is in line with our estimates. EBITDA and margin slightly better, but it's a miss on the PAT because other expenses have gone up. Talk to us about your reading of the numbers.
Yeah, as far as you PAT is concerned, it's more a function of other income as well. So because they have a good, investment book, and through that the PAT number gets influenced. But a better metric to my mind is operating profit. So increase in the operating margin is definitely a good sign. So 2.3% they have reported as compared to 1.8% last quarter. So this is a positive aspect. But one thing, if you look at the 9-month number, so their top line has grown almost 153% revenue growth. Whereas with this kind of a performance in Q3, their operating profit has grown only by around 42%. So this run rate mismatch on this operating profit is particularly because of the quick commerce business, which is now almost 70% plus of their total pie. And there the cash burn is happening faster. So that is restricting the operating profit growth. So I think market will again take it with neutral kind of a view on this, though it looks positive sequentially. But cash burn on the quick commerce business is having its heat because food delivery anyways is doing good. So valuation front, if you look at overall, it's still far expensive.
And Dharmesh, largely, I'm just looking at the shareholders' letter right now. I'm looking at Blinkit's numbers. While the NOV, the contribution margin, they're all largely in line with our estimates. I'm really surprised to see this adjusted EBITDA as percentage of NOV has come in smack at zero. We were expecting a negative 1.1% here. But this number, adjusted EBITDA, is absolutely at zero now. Do you believe they're at the cusp of profitability?
Difficult to say. I mean, I have to go into the details of this entire, GOV, how they have calculated this adjusted EBITDA and what has gone into it. But again, it's an adjusted EBITDA kind of a metric for this Blinkit. So we have to, one more quarter has to be seen whether this is, maintainable or sustainable. Because let's not forget, Amazon has come, big time into the same for the business. At the same time, Flipkart has also been quite aggressive. So two more strong players with incumbents already giving a fight for the money. Swiggy is already piling on the cash balance so that they can fight out this quick commerce business. So it would be too early to predict that it's in a cups of turnaround and inflection point where profitability will come back. But having said that, I have not exactly looked into the details of calculation of this adjusted EBITDA.
Okay. And Dharmesh, I'm just going to read out the net average order value numbers to you for Blinkit. It's come in at 547 this time. It was 524 in the previous quarter and 546 this time last year. So at least from the trend I can see, the net order value is at a one-year high for Blinkit. Talk to us about how you're seeing Blinkit as a growth driver for the overall eternal earnings.
See, I mean, there are two parts to it. One is the top line growth. So top line growth, everybody is getting. It's not only, I mean, eternal. Other marketplaces are also getting the top line growth in the quick commerce space, and they will continue to do so. So that's not a problem at all. The problem happens at the operating profit level where the cash burn is very high, and that the only way of looking at it is the top line growth should continue at the same pace, and the incremental growth or degrowth in the cash burn should be faster than the top line growth. That is still not happening. That's why I alluded to the earlier 9 month kind of a revenue trajectory where 153% was the growth in the revenue, whereas operating profit grew by only 42%. So we are looking for that metrics to pan out first, and that should be across the board because the other place, if also they are also reporting similar set of numbers, then definitely this can be a turnaround story. But to our mind, I mean to our sense, it's very hard to get. I don't see it happening in next 3 to 4 years.
So, Dharmesh, lastly, before we let you go, it looks like a good set of numbers prima facie, except that a little bit of cut on the pat coming in. But yes, you have this big news of Deepinder Goyal putting down his papers. Amid all of this, tough to guess, but give us your estimate on how the stock could open tomorrow.
I think initial reaction will be a bit negative. It should, correct, but eventually, I mean, with this kind of incremental growth which we have seen in the operating profit, and as you highlighted that the Blinkit is also getting close to the adjusted EBITDA is almost zero, so it should recover. So the for trading perspective, I mean, the advice would be if it opens up say 3, 4, or 5% lower, it should be a good buying opportunity. Having said that, I must clarify this is just a trading call from our end. I think it can have a trading play of again 5-10%, but eventually on a fundamental basis or long term basis, we are negative on the entire space.
On the entire space, that's the take coming in from Dharmesh. But on a trading basis, at least in the near term, the stock looks positive. Dharmesh, on that note, we'll let you go. Thank you so much for taking the time out and decoding Eternal's earnings with us. Well, with our viewers, we'll wrap up this special edition of Earnings with ET now. Largely, just to sum it up in a line, largely good set of numbers coming in from Eternal, in line with expectations, but it's a beat on the EBITDA and the margins front. But yes, sudden shocking resignation coming in at the top. Deepinder Goyal has resigned as MD CEO, and Blinkit's head, Albinder Dhinsa, will be taking charge. With that, we'll wrap down this edition. Thanks so much for tuning in.